ਵਿਆਜ ਦਰਾਂ ਵਿੱਚ ਹੋ ਰਹੇ ਵਾਧੇ ਦੇ ਚੱਲਦਿਆਂ ਬੈਂਕ ਆਫ ਕੈਨੇਡਾ ਵੱਲੋਂ ਘਰਾਂ ਦੀਆਂ ਕੀਮਤਾਂ ਵਿੱਚ ਭਾਰੀ ਵਾਧਾ ਹੋਣ ਦਾ ਖਦਸ਼ਾ ਪ੍ਰਗਟਾਇਆ ਗਿਆ। ਬੈਂਕ ਦਾ ਕਹਿਣਾ ਹੈ ਕਿ ਇਸ ਨਾਲ ਲੋਕਾਂ ਸਿਰ ਮਾਰਗੇਜ ਸੰਬੰਧੀ ਕਰਜ਼ਾ ਵੀ ਵਧੇਗਾ। ਆਪਣੇ ਸਾਲਾਨਾ ਫਾਈਨੈਂਸ਼ੀਅਲ ਸਿਸਟਮ ਰਿਵਿਊ ਵਿੱਚ ਬੈਂਕ ਨੇ ਕਿਹਾ ਕਿ ਅਪ੍ਰੈਲ 2020 ਤੇ ਅਪ੍ਰੈਲ 2022 ਦਰਮਿਆਨ ਕੌਮੀ ਪੱਧਰ ਉੱਤੇ ਘਰਾਂ ਦੀਆਂ ਕੀਮਤਾਂ ਵਿੱਚ 53% ਵਾਧੇ ਦੇ ਬਾਵਜੂਦ ਬੈਂਕ ਨੂੰ ਇਹ ਤੌਖਲਾ ਹੈ ਕਿ ਜਿਨ੍ਹਾਂ ਲੋਕਾਂ ਨੇ ਪਿਛਲੇ ਜਿਹੇ ਘਰ ਖਰੀਦੇ ਨੇ ਉਹ ਜਦੋਂ ਉੱਚੀਆਂ ਦਰਾਂ ਉੱਤੇ ਮਾਰਗੇਜ ਰਿਨਿਊ ਕਰਾਉਣਗੇ ਤਾਂ ਉਹਨਾਂ ਨੂੰ ਵਧੇਰੇ ਵਿੱਤੀ ਝਟਕਾ ਬਰਦਾਸ਼ਤ ਕਰਨਾ ਹੋਵੇਗਾ।
The FSR is our annual assessment of the key vulnerabilities of and the risks to the Canadian financial system. Our goal in identifying these is to help households, the private sector, financial authorities, and governments take actions to reduce them. We've just come through the biggest, and I hope the biggest we ever face, shock. 2 years of an unprecedented pandemic, economic and social upheaval. We're pleased to report that our financial system is strong and weathered the crisis well. Now the global economy is dealing with a new set of challenges. High inflation, rising interest rates, Russia's unprovoked invasion of the Ukraine, and financial market vulnerability. So it's a good time to discuss existing and emerging vulnerabilities and risks. 2/3 of Canadians are homeowners. Just under half own their home outright, and the rest have a mortgage. Of those, 70% have a fixed-rate mortgage that is not immediately affected by higher interest rates. The other 30%, or 10% of Canadians, have a variable-rate mortgage. Throughout the pandemic, a growing number of Canadians took out mortgages that were very large relative to their incomes at variable rates with amortizations of more than 25 years. And our model suggests that the most highly indebted households saw only a small increase in their liquid assets in that time. This brings me to our second and related vulnerability: elevated house prices. Strong demand for more living space, low interest rates, inadequate supply, increased investor activity, and expectations of future increases all made for a hot market during the pandemic. House prices rose about 50% on average since the beginning of the pandemic. As Canadians return to more normal activities and interest rates rise, we expect to see some moderation in the housing market. Indeed, this has started. Recent data indicate a marked decline in the level of resale activity from its peak. And even if house prices are up sharply on a year-over-year basis, some markets have recently seen declines. With inflation well above the 2% target and the Canadian economy overheating, the bank's #1 priority is to get inflation back to target, and we are raising interest rates to make that happen. Labor markets are very strong and household balance sheets have improved overall. The economy can handle, indeed needs, higher interest rates. And given the unsustainable strength of housing activity, some moderation in housing would be healthy. But high household debt and elevated house prices are vulnerabilities. If the economy slowed sharply and unemployment rose considerably, the combination of more highly indebted Canadians and high house prices could amplify the downturn. If those highly indebted households lose their jobs, they would likely need to reduce their spending sharply to continue servicing their mortgage. In addition, a big correction in house prices would reduce both household wealth and access to credit, particularly among the most indebted households. Were this to affect many households, it could have broader implications for the economy and the financial system. This is not what we expect to happen. Our goal is for a soft landing with inflation coming back to the 2% target, but it is a vulnerability to watch closely and manage carefully. Our recent monetary policy decisions. For some time, we have indicated that with inflation well above our target, with the economy overheating, we want to get our policy interest rate back into the neutral range quickly. And we've indicated we think that range is between 2% and 3%. We think the economy can handle higher interest rates. We think the economy needs higher interest rates. At our last decision, we indicated that we were prepared to move more forcefully if needed. And last week, Deputy Governor Paul Beaudry also indicated that given that inflation looks like it's going to go higher before it eases, given that inflation has been broadening and the economy is overheating, the likelihood that we may need to go to the top of that 2 to 3% neutral range, or possibly somewhat above it, to bring inflation back to target has increased. So